Once upon a time, gold was money. On a gold standard, governments and banks could, broadly speaking, only print as many notes as they had the gold supply to back them. This placed a restriction on government. The same restriction we all have. We can only spend as much money as we have, or as people will lend us. It is a little more complicated than that, but the broad point remains. In 1914, shortly after the beginning of the First World War, the British, French and German governments all took their countries off the gold standard. Then they printed the money they needed to pay for the war. What resulted was, as we all know, one of the most terrible wars in history. 4 years of unrelenting horror, some 37 million people died. A further 50 to 100 million lives were lost to the Spanish flu that followed, which probably had its origins on the Western Front. If those governments could only have spent as much gold as they had in their vaults, the war would have had to end when the gold ran out. As they didn't have enough gold to pay for the war to go on for long, the war really might have been over by Christmas. But by manipulating the money system and coming off the gold standard, they enabled themselves to both print money and run up deficits, spend more money than they earn. Thus it became possible for the war to continue in the terrible way that it did. This was the beginning of the fiat money era. Fiat meaning money by command. You must accept this money as payment for goods and services and pay taxes in it. As this money is not backed by anything tangible, there is almost no limit to how much can be created. This makes inflation of some kind almost inevitable. It also gives disproportionate power to the body that is able to create the money, particularly if no significant effort is needed to create it. As Alan Greenspan said, standing before Congress, it is inevitable that the authority which is the producer of the money supply will have inordinate power. Without their control of money, none of the catastrophic wars of the 20th century could have dragged on to the extent that they did. No war has ever been fought on a transparent cash basis. Without the money counterfeiting tool of government, wrote American economist E.C. Riegel in 1949, there could be no war except by popular mandate, because the price would have to be consciously and immediately paid. The would-be war-maker first of all conquers and subdues his own people by the narcotic of counterfeit money. If the people would hold the veto power of war, they must deny to their government the power to counterfeit money. Take away this power to create money and run deficits, and suddenly the scope of a war is limited to the amount of money the government has. Independent money limits wars. To me, that is the most compelling argument there is in favour of independent money. It is a force for peace. I'm not saying there would be no wars. There were plenty of wars under a gold standard, usually entailing the abuse of that standard. But if money were beyond the control of governments, wars could not be of the same magnitude as those that blighted the 20th century. But independent money doesn't just limit wars. It limits everything a government does. The growth of the state. At present, we live in a world where the state looks after our birth, our education, our health, often our employment, our old age, and even our burial. 'Twas not ever thus. In the UK, the move towards the large state model began in the late 19th century. First, there was compulsory education. Then the liberal reforms of 1906 to 14 saw the introduction of state pensions, national insurance, and income tax. These were only small steps. It was with World War I and the abandonment of the gold standard that the role of the state in the life of an Englishman really began to grow. America was on its own path to large government. In 1913, income tax was introduced, and the Federal Reserve Bank was created to manage the dollar. In 1932, to generate the funds he wanted for his New Deal, Roosevelt confiscated Americans' gold, gave Americans dollars in exchange, and then devalued the dollar. In the 1960s, under the presidency of Lyndon Johnson, the American state grew even further. Johnson's war on poverty saw the Social Security Act, the Food Stamp Act, the Economic Opportunity Act, and the Elementary and Secondary Education Act signed into law. But these reforms, together with America's involvement in the Vietnam War, cost money. The USA began printing dollars, many more dollars than its gold supply could bag. This would lead to a run on America's gold by other nations, and in 1971 the USA abandoned the gold standard for good and joined the rest of the world under a fiat money system. There are many, particularly on the political left, who think the large state model is the right one. There are others, particularly in the libertarian area of the political spectrum, who don't. Wherever you stand, the large state model is only possible, if not inevitable, when government controls money. If money becomes independent, then a government struggles to fund itself. A word about the great obfuscation that is inflation, and how it causes the wealth gap. Inflation once meant an increase in the supply of money and credit leading to higher prices. Deflation meant the opposite, a decrease in the supply of money and credit leading to lower prices. These meanings have, however, been distorted over time so that inflation is now rising prices and deflation falling prices. It may not seem important. Meanings of words change all the time. But it is. The official method of measuring inflation, the Consumer Price Index, CPI, tracks the prices of things we commonly use: food, clothing, transport, energy, and so on. From 1989 to now, CPI has averaged just under 3% in both the UK and the US. But the amount of money circulating has grown at an average rate of 11.5% per year over the same period. Money supply has grown faster than the economy. In 1971 in the UK, there were £31 billion in circulation. Now, there are just under 2.1 trillion. That is a 67-fold increase. Are we 67 times richer? A few people are, but most of us aren't. Similarly, the US has seen $800 billion become $16 trillion, a 20-fold increase. Research by think tank Positive Money shows that only about 10% of newly created money goes into the kind of consumer goods tracked by CPI. So, all CPI does is measure the effects of about 10% of money creation. What's more, many of the goods tracked by CPI face the deflationary pressures of competition and improved productivity. For example, computers and other mass-produced goods tend to fall in price. Positive Money's research also demonstrates that 13% of newly created money has gone into real businesses that create jobs and boost economic growth, 37% into financial markets, and 40% into residential and commercial property. Is it any wonder the financial and real estate sectors have grown so disproportionately large? That's where the money's gone. The trusted tool to deal with inflation is to raise interest rates. The effect of higher rates is that money costs more to borrow, and people borrow less. So the cost of assets that people use borrowed money to buy, houses and financial assets especially, tends to fall. But the last thing a government wants on its watch, particularly if an election is looming, is falling house prices or a falling stock market. Where possible, it will not want to raise rates. So how handy it is to have an official measure that proves inflation is low, especially one that ignores 77% of new money supply. But the manipulation of money has unseen consequences. It actually causes the wealth gap. Government printing of money, even with quantitative easing, is not quite as willy-nilly as some would have you believe. Private banks actually create more money than government and central banks. The majority of money in the modern economy is created by commercial banks making loans, says the Bank of England. About 96% of the money, in fact, in both the US and the UK. Electronic banking, which began in the 1980s and replaced the cash and cheque-based economy, has made it possible for banks to do this, facilitated by the decision to ignore money supply growth in measures of inflation. The social consequence of this has been for the financial sector to grow disproportionately large and influential, for banks to have become too big to fail. More and more people have been drawn to this sector where they can get some kind of exposure to new money creation. But elsewhere, perfectly innocent people lose out because of it. If you own the assets, or if you operate in the sectors that benefit from all this newly created money, the financial sector, and in the case of the UK, the London property in which it mostly lives, you make spectacular gains. But if you don't own these assets, and most young people don't, you get left behind, and the wealth gap gets bigger. We're constantly told that hard work pays. If you start out with nothing, the way to better your lot is to work hard. But significantly bettering your lot is not so easy these days, because wages have not kept up with the increase in money supply. In the US, wages have gone from around $6,000 per annum in 1971 to $44,000 today. So, while the money supply in the US has increased by 2,000%, Wages have increased by 750%. The inequality in the UK is greater. Money supply has increased by 6,700%. Wages by just 1,250%. Wages, in short, have failed to keep up with inflation. In addition, you are also taxed heavily on your wages, and the harder you work, the more you are taxed. At the same time, many of the assets you might want to buy are rising in price and getting further out of reach. Those that own the assets you want to buy are not taxed on their gains unless they actually sell, and capital gains tax is lower than income tax. The result is a system in which labour is penalised, and capital and assets are not. Inflation and income tax between them actually increase the wealth gap. Many families now find themselves having to work longer hours, with both spouses in the workplace taking on larger debts and having fewer children just to maintain an ordinary middle-class lifestyle. Many of their children face unprecedented levels of debt and in many places will never be able to buy a house. What is happening is an insidious transfer of wealth from those that don't own the right assets or operate in the right sectors to those that do. This process will not stop until inflation is measured accurately and honestly, and until taxation is reformed. Forget property. Money is theft. Why Bitcoin is libertarian utopia. There are 4 ways a government funds its activities. The first is through taxation. Income tax, property tax, road tax, sales tax, corporation tax, import duties, and so on. Income tax is by far the largest earner. About 40% of government revenue in the US and 30% in the UK, 50% if you include national insurance. It is easy to collect because it is levied at source. Add to taxation various rents and income from its activities and the sale of assets. The second way a government funds itself is through debt. Governments borrow money through the bond markets. The third is by actually creating money, printing it and creating it by other means such as quantitative easing. The fourth is by manipulating money, inflation. We have just seen how insidious this is. Let's be idealistic for a moment and imagine that Bitcoin and other independent monies become the globally preferred means to make and receive payment. I don't see this as at all likely in the short term, but in the longer term I do, and the implications are enormous. In a flash, the ability for a government to fund itself through the manipulation of money disappears. You can't obfuscate Bitcoin supply. Inflation is transparent. You can't quantitatively ease Bitcoins. Governments, without a very aggressive and potentially impractical Bitcoin confiscation scheme, will struggle to use your Bitcoins to bail themselves out. Deficit spending becomes impossible. You can't spend Bitcoins you don't have. Central and private banks can't create Bitcoins when it suits them, and governments can't print Bitcoins. They'd have to compete to mine coins along with everyone else. It all means you don't have to pay the price for the mistakes of governments and banks. They do. They will have to act more prudently or go under. If it can't fund itself through the manipulation or printing of money, a government would have to rely more on borrowing. But even that option is not as appealing as it once was. A government can no longer devalue its debt through inflation or the suppression of interest rates. With no control over money, government borrowing rates would have to increase to cover for the very real risk of default. So, government will find itself forced to live off its tax revenue. But again, Bitcoin could also change the way we're taxed. If workers are paid in Bitcoins, income tax will become much harder to levy at source. Many people will do what corporations and the self-employed already do, try to find legitimate ways, and in some cases illegitimate ways, to reduce the amount of tax they have to pay. And if government demands too much tax, people look for ways to avoid it. It will be no different with Bitcoin. It will mean greater state resources are required to stop evaders and avoiders. An investigation might not be worth the cost for the amount it levies. This, of course, raises all sorts of moral issues. But taxation, in its current form, will be harder to enforce and more costly to levy. In all probability, we'll move towards the taxation of consumption and assets rather than labour, a land value tax even. Why is Bitcoin libertarian utopia? Libertarians tend to be of the view that most government action, even if well-intended, has negative consequences. Losing control of money means that suddenly governments are more limited in what they can do. There might be fewer wars, there might also be less state welfare. That's a frightening thought for many, but the libertarian view is that welfare would be both cheaper, more effective, and more widespread if the state stayed out of it. But it's not just that Bitcoin limits government. It also has the potential to redistribute wealth. A deflationary system of money means savers are rewarded rather than debtors, a paradigm shift in the way things work. A society that transparently taxes consumption rather than production means labour is rewarded rather than penalised. A money that is free of banks means people can bypass banking systems. The huge concentrations of money and power that have found their way into the financial sector can finally be diluted. Suddenly, the enormous cost of the state, and your government is the most expensive purchase you will ever make, is lightened. Being taxed less and compensated for their labour in a currency with increasing purchasing power means workers really do have a chance to better their lot. As Satoshi said, Bitcoin is very attractive to the libertarian viewpoint if we can explain it properly. Ain't it so?